It's a historic day for gold. Actually, it's a historic week. The entire week has just been marked by volatility. We saw gold breach $2,000 again for the first time since August 2020. Now it's come back down. Today, we're seeing a huge correction in the oil and gold markets. Joining us today to break down what is going on is Gary Wagner, editor of thegoldforecast.com. Momentous week. What a timely day to have you on the show. Welcome back, Gary.
Thank you so much. It's great to be here, and you're correct. We have watched history in the making over the last couple of weeks.
Let me just sum up here for our audience what's been going on today. My colleague at Kitco News, Anna Golubova, has summarized it very well in an article she wrote today. I'll just read the first two paragraphs of her article here. The gold market was trading near daily lows after losing more than $70 and falling below $2,000 an ounce. The sell-off coincided with oil plummeting 10% and risk assets such as stocks and cryptos seeing strong gains. The commodities rally cooled on Wednesday with oil, platinum, silver, copper, wheat, and corn reporting losses. WTI crude fell 10% to $110, while Brent crude was down 11% at $114 a barrel. Gary, when was the last time you saw this level of volatility in the commodity space? It just seems to me that the markets are extremely, if I may use the word, bipolar right now. Is it going up? Is it going down? Well, it's doing both. What's going on, Gary?
Well, to answer the first part of your question, this is the third occasion where I've seen these kinds of move in gold. The first one occurred in the middle of 2011 when gold hit $1,920, which at that time was a record high. The second occasion I saw this kind of action occurred just before August 2020. And that, of course, is when we hit the new record high at 2,088. And then this is the third occasion, because considering that this rally began at the 1700s, about 1750 to 1790, and climbed well past 2000. I mean, it broke through 2000 just the other day like a hot knife through butter. What I can say is that I've seen this happen in 3 times. What I've never seen is the kind of intraday volatility that we have seen. And I'm really addressing Thursday, the 25th, when the actual invasion, when Russia invaded Ukraine, we saw gold trade from high to low with a price range of $100. And that's a tremendous range for a day. That's what we find a really strong rally to be. And the interesting thing is it oscillated all over the place. Now, we then had a steady climb. That climb has continued up until today, of course, today being the largest single-day drawdown that we've seen in quite some time. So that's the key. The key right now is there's 2 primary motivating forces behind how gold is going to react, whether it's going to continue to move up or down. The first one is the crisis in Ukraine. That geopolitical tension, of course, is very bullish as an undertone for gold. The second thing is we are still at a record high level of inflation. Yeah. CPI last month came out at 7.5%. We'll get a report tomorrow for the numbers for February.
Okay, let's just touch on that real quick. Tomorrow's report, what's your forecast?
Well, we believe that it's going to be higher, much higher. Now, the analyst forecast is predicting that it's going to move from 7.5 to 7.9. I wouldn't be surprised if we saw 8 or 8.1. And the reason behind it is the CPI, unlike the PCE, which strips out food and energy, the CPI brings that into the fold. Our readership and our viewers know that food costs have been spiraling out of control. And anyone that fills their gas tank knows that there's been a tremendous rise in the price of oil, which is what is used to make gasoline. Those 2 components are going to be the primary reason that we see inflationary pressures rise above the already 40-year high at 7.5%.
Food costs are going up. I'm just musing here. You know what we need, Gary? We need a food replacement pill. We just pop one, that's lunch. We pop one, that's dinner. think that would solve a lot of problems around the world. Somebody should get on that. Okay, let's talk about gold's resistance level. Can we pull up a chart and take a look at gold's technicals? Now, some people I've talked to traders in particular have noted actually even before today's price action that gold would see a major correction at around $2,000. It was having a hard time staying above $2,000, and they argued that the move up was too dramatic and too soon. And we're seeing that play out right now. Are they correct in hindsight? Well, in hindsight, they were correct. But was the move overstretched, Gary? Was it above what you would expect it to do right now at this current junction?
My personal feeling is that it wasn't overdone or exaggerated. The key to looking at current gold pricing is that it was based upon the crisis in Ukraine. The Russians have destroyed multiple parts of cities. There has been death and destruction. And it is kind of like the United States going to war against the Bahamas. I mean, the power of a superpower such as Russia can obliterate any small independent country. And that's what was driving it up. It hit a high really yesterday, the highest point at 2,075. But what's interesting is it opened below $2,000 yesterday and closed roughly at 2,050. So my sense was that resistance, the first level of resistance that I was plotting, came at 2,000. And I was saying that it could easily become the support level. Support and resistance are one and the same. It's a ceiling or a floor. In other words, once price goes up above it, it becomes a support area. As markets are trading towards that price point, it's a resistance area. It now has become resistance, but we have gold at 1996. So it's very, very close to 2000. The question is whether or not we will see a continuation of the selling pressure that started today.
I love how you're asking my question even before I ask it. You're reading my mind, Gary. This is how well we know each other. Excellent question. Can we see a continuation of this price trend?
Well, here's the thing. We have to acknowledge, I'm a hybrid trader, meaning I look at fundamentals and I look at technicals. But gold's recent rise has been news driven, absolutely fundamentally driven. The two things that I talked about, inflation and turmoil, a crisis in Ukraine. The announcement today was that President Zelensky is willing to compromise. And that's the first time he kind of backed down. And that's why we saw gold go down. Now, if an agreement is actually reached and Russia pulls its troops out of Ukraine, most certainly you will see some pressure in gold, and it most likely will go to lower pricing. If they cannot come to a compromise somehow, and the shelling resumes and Russia's troops remain in Ukraine, it's going to find support and could go up. And so I'm not trying to say it could go up or down. What I am saying is it will go up or down based upon the outcome of Zelensky's statements and the talks that are going to be held in the next few days.
It's interesting how you're pegging gold's future, literally, to what's going on in Ukraine. What happened to the Fed? What happened to inflation? Are those still dominant forces, or are those taking a back seat for now?
Absolutely. Now, it was both rising rates of inflation and geopolitical tension combined that created the kind of run we've seen. If you look at the chart that I have up on the screen, the recent move is almost parabolic. It's a very high angle. It's not straight up, but it's almost a parabolic move. And that was based on inflation at a 40-year high and Russia's invasion of Ukraine. Inflation is going to play a key component. Let's assume that the crisis in Ukraine is resolved. Does that mean that gold has nowhere to go and it will just drift lower? My answer to that is no, because inflation has to come into play and it has to be reduced. Until it's at an acceptable level, and we're very far from the Fed's target of 2%, when we're predicting 8% with the CPI and I believe 6% with their preferred method, the CPE, to get from 6 to 2%. That's quite a ways to go. And so that is going to become front and center if the crisis in Ukraine is dissipated and resolved. Then people will focus immensely on the current level of inflation and what the Federal Reserve, along with other central banks worldwide, do about it, which is to begin interest rate normalization.
What was interesting to me, Gary, is that the dollar, the U.S. dollar and gold have been moving in tandem upwards over the course of the entire month of February up until today. And so usually this doesn't happen. They typically move in opposite directions. On a sustained, not even on an intraday level, but on a sustained level over a period of time, whenever you have gold and the dollar move in the same direction, either up or down, what does that mean, Gary?
There's only a few instances where we've seen that happen. Now, the recent move has been really centered around Ukraine because with the increased geopolitical environment that's there and the offshoot that it has been causing stocks to go dramatically lower. I mean, I think yesterday NASDAQ had a 8% drawdown. Then you have investors flocking to safe haven assets. Gold is absolutely a preferred safe haven, but so is the US dollar. And so you got both of them moving higher in tandem when typically you have an inverse relationship or an inverse correlation between dollar and gold pricing. They tend to move in opposite directions. So that's when we saw it. The last time we saw that occur was was when the central bank was trying to resolve the recession, except what we saw in tandem was more stocks and gold both moving higher because they were printing money and the dollar going lower. So this is a very unusual scenario.
Yeah, it is an unusual scenario. Here's my question for you, Gary. It's a safe haven against what? You mentioned that they're both safe haven plays, where at least the sentiment is that we should be moving capital into safe haven assets, which is why they've both been moving in tandem. That I understand, but what is it a safe haven against? We didn't see equities collapse over the last month. There have been a few periods of volatility, but we haven't seen a major S&P 500, collapse down 25% over February. We haven't seen other assets like real estate collapse. This is in the housing crisis of 2008. So does this scenario in which the dollar and gold move in the same direction, does this scenario only happen when we have, let's say, a war or a major geopolitical uncertainty? I'm just trying to pinpoint the root cause of this safe haven demand here.
My sense is, of course, what you mentioned is absolutely a component of why we see dollar strength and gold strength happening simultaneously. However, even though we have not seen U.S. equities crash, if you look at any chart on the S&P, the NASDAQ, or the Dow, you've seen consistent days, even over the last 2 weeks, a consistent decline in pricing. So it's a safe haven against a risk-on environment that has switched to a risk-off environment. So they're moving money out of their stock portfolio. They're putting it in bonds for safety, which is supportive of the dollar, and they're putting it in gold. So while you're correct in saying we haven't seen a 25% price decline, we've seen a sizable decline, about 8 to 10% in the indices. And so that's why you're getting what we are seeing now, which is the dollar moving higher, or up till today, and gold moving higher at the same time. Okay. It's a risk-off play.
Do you think the dollar strength has had any impact, or maybe, well, I don't know which leads one with the other, but 10-year yield in the U.S. dollar, the 10-year yield has seen some strength this year as well. Bond yields overall have been climbing over the last month. Do you think that was correlated with the strength of the dollar?
I think that what we saw was that in all markets, it's a forward-thinking market sentiment. And so under the anticipation that the Federal Reserve will implement their first rate hike since the recession and all of the turmoil that began in March of 2020, the forward-thinking mentality of the investor has been bidding up yields in debt instruments
Yes.
ahead of the actual move by the Federal Reserve. They're anticipating that yields will go up, and we're seeing them go into the debt instruments under the belief that a tightening of the monetary policy will cause, it will raise interest rates, which will make yields of bonds and bills more attractive.
So yields have gone up as a result of the expectation of Federal Reserve rate hikes this year. That I understand. Gary, let's do some brainstorming here. Let's suppose that this war in Ukraine never happened. Let's suppose we never had these geopolitical tensions. Russia never even postured to invade. So let's just scrap that scenario completely.
Okay.
All else being equal, assuming we still have the expectation of a Fed rate hike coming up next week, assuming we still have inflation at current levels, assuming we still have a strengthening U.S. dollar, where would you, in that hypothetical universe, where would you see gold? Higher, lower, or same level as today? So it's just scrap geopolitical tensions. Yeah.
Let's say, let's pretend that never happened.
Yeah.
Investors are focused upon inflationary pressures only now, and they're seeing a rise in crude oil even before the invasion by Ukraine, and a tremendous rise in food costs. And of course, as oil rises, the cost of food has to, because of the cost of actually producing the food. That takes oil, and transporting the food from farm to table. That takes gasoline too. So as oil began to ratchet up, which occurred prior to the invasion, inflation had been ticking up. We would have seen gold move higher. My sense is it wouldn't have moved as aggressively to the upside as we're seeing now. You would have had more muted rallies, but I think it would have gone higher even without that component. It just probably wouldn't have hit this high at this price.
I see. Okay, so if I can just sum up for the audience, and please correct me if I'm off track here, gold has moved up because of underlying inflationary fundamentals. It's already been trending up anyway, even prior to the war in Ukraine. We did see a geopolitical risk premium being added to gold, hence why we saw $2,000 an ounce. So I'm just going to ask you to put on your geopolitics hat here and just speculate as to how this war could resolve itself, if indeed we do see either a military and or diplomatic resolution in sight in the near future, because that, as you mentioned before, does impact the gold market. How do you see the war playing out? How do you see gold reacting?
For the crisis in Ukraine to end, one of two things has to happen. Either the Ukrainian government surrenders, so to speak, or comes to a compromise and makes a pledge that they don't want to join NATO. They've put in their application for the European Union, but they are not in NATO, which is why there's no troops on the ground from any NATO country. But the real truth of the matter is that as Putin was putting troops on the border of Ukraine for the weeks before, and you backed this up with a poll that showed that the vast majority, including myself, could not conceive that Putin would actually invade Ukraine. It was unthinkable. What does he want to do with it? I mean, it did not make sense. When the invasion initially took place, it came when Putin announced that two areas in the eastern part of Ukraine, which is where the pro-Russian separatists reside, are now independent countries. At that point, most analysts, including myself, really believed that he's going to stop at that point. He really accomplished what he wanted to, and that was to take back that territory, kind of like what he did with Crimea. When he went in and actually invaded Ukraine itself,
yes,
and called it a special operation, and peacekeeping troops were sent in, they started to destroy the city. But it didn't escalate until the military of Ukraine really stepped up and made it a very, very difficult task. Putin thought he'd go in and Ukraine would roll over within days. And they had two goals, and they're odd goals, but one was demilitarization of Ukraine, get rid of their military. And the second one was, I think it's called denazification. In other words, he was saying that the right-wing government has to be removed. When the real truth is, he invaded Ukraine, in my opinion, because he wants to get rid of the current administration and replace it with a much more pro-Russian president and underlying political structure. That's why he went in. When he wasn't successful after the first 2 or 3 days, that's when the cruise missiles started going. That's when he started hitting civilian targets. And that was a huge escalation. That caused a huge move in gold, because that's no longer a controlled kind of skirmish. It's a full invasion into a sovereign country. The first time that that has occurred as a European country has invaded another sovereign European country since World War II. It was simply unheard of, and very few people believed that that was Putin's intention. It turns out we all got it wrong. He planned to really go in there and invade and throw the government out. And I think that that's why the current president of Ukraine is realizing that there's no way they can win this long term. And as civilians continue to get, more civilians continue to get hurt, he realized that for the sake of the destruction and loss of lives, that he has to come to a compromise. He was kind of forced to the table, so to speak.
Yeah, it is a tragic scenario what's going on over there. You did mention earlier in the interview that you likened this war to a U.S. invasion of the Bahamas, in the sense that the power disparity between these two nations is astronomical. Are you surprised then that the Russian forces are meeting such strong conventional resistance from the Ukrainian forces? In other words, the Russians are not enjoying the type of success through conventional military means as Putin might have wanted?
I'll tell you something. It was a very, very cheerful surprise. The Ukrainians banded together, civilians and the military, all carrying weapons, and actually did stop the Russian invasion, at least slow it down. They shot down planes. They exploded armored vehicles. They killed Russian troops. It wasn't expected that they would mount the kind of unified defense of their country. At the same time, the sanctions levied by the democratic free world, they haven't really affected Putin, for instance, but they have definitely, one, isolated him from all of the other countries except maybe China and North Korea, and two, have created extreme hardship for the citizens of Russia. And so that's why we're seeing Russians protest against the war and then get arrested. I mean, I'm willing to have a peaceful protest and I'm willing to march, but I don't know that I'd be willing to get thrown in jail for 3 years or 4 years, which is what is happening in Russia. We had protests around the world, and the fact that there were Russians willing to risk their liberty, so to speak, to speak their mind that what Putin was doing was wrong is really historical, because typically Russia and Putin do not let any other viewpoint come out besides his.
And just to follow up on the poll you mentioned earlier, I did run another poll recently on my Twitter page asking followers what they think is the most likely outcome of this war. And I listed 4 possible scenarios. Number 1, Putin withdraws. Number 2, Ukraine gets a puppet government, which is more or less in line with what you had predicted. Number 3, Putin gets ousted by a military coup within Russia. Number 4, NATO intervenes, World War III erupts, and the situation really escalates out of control. Of those 4 options, number 2 was the most likely. Ukraine gets another government. People don't think that Putin is going to withdraw with his tail tucked between his legs, and the 3rd and 4th options, military coup and World War III, were equally unlikely, according to this poll. So, all right, given that people were more or less in agreement with you, the consensus view was in agreement with you, Gary, where do you see the gold price headed by the end of the year? Well, we'll give a medium-term outlook and a long-term outlook, given everything else we discussed.
Okay, if the talks yield a real solution, and it came with the fact that Ukraine was willing to compromise, because my belief is Putin was going to stay the course. The longer it took, the more aggressive he would get and the more damage he would do to Ukraine. He'd pummel the entire country. Now, What I think in terms of a long-term prognosis is if, in fact, there is a trucer piece, we could see gold retrace. We could see it go to, say, 1952, which is a 38.2% Fibonacci retracement of this leg of the rally. A 61% retracement would take us to about 1876. I think that's less likely. And from that point, I think that the inflationary pressures, because they're not going to be resolved overnight, they're going to continue to remain persistent. That's going to, at some point, support gold and let it go back into rally mode. I think we're going to see a retracement here, but it could be very short term, could be extended, but it is not the end of gold going up. I believe that by the end of the year, gold will breach 2,088 and trade as high as 2,100.
Excellent. All right. Excellent insights. Thank you very much for your thoughts and your prognosis. And we'll speak to you again soon. No doubt we'll have plenty of volatility in the coming weeks to discuss. Thank you, Gary.
Thanks for having me. Bye-bye.
And thank you for watching Kitco News. I'm David Lin. Don't forget to subscribe to our YouTube channel.